Most people think that trading Bitcoin is about making more money, but for the pros, the institutions, they play a totally different game. And they only ask one thing: how do we grow our Bitcoin holdings year after year after year? So personally managing 6 and 7-figure Bitcoin accounts and working with lots of Bitcoin miners and Bitcoin hodlers that only have Bitcoin as collateral to work with and that only want to earn more Bitcoin, I've come up with a little known trading secret, and it's called inverse trading pairs. These let you actually rack up more Bitcoin on every single trade, so your stack grows even if the market is tanking in dollars. So today I'm going to break down exactly how it works and how you can use it to build real, consistent wealth in Bitcoin, not just chase dollar gains. So here's what we're going to do. First, I'm going to show you why focusing on earning Bitcoin, not dollars, is the most important shift that you can actually make. Then I'll explain how inverse trading pairs actually work. And finally, I'm going to show you how we use them inside an automated system to grow Bitcoin even when the price is going down. So firstly, I want you to imagine that you own a piece of prime farmland. Most people would work that land, sell the crops for cash, and then spend the money just to survive. Their goal is short-term income. They never stop to ask whether they actually own more land at the end of the year. But the smartest landowners, they actually think differently. They don't just harvest crops, they reinvest the yield to actually buy more land. And as the years go by, not only are they producing more every season, but the land itself is appreciating in value. They're being paid twice, once by the output and once by the asset growing underneath it. And Bitcoin, it works in exactly the same way. So if you trade Bitcoin to make dollars, you're selling the land just to buy groceries. You might feel richer in the moment, but you're slowly giving up the thing that actually compounds over time. When you earn more Bitcoin, something fundamentally different happens. You're increasing the size of the asset and positioning yourself for its long-term appreciation. Every trade becomes the seed of a much larger payoff down the line, not because you predict a price, but because you own more of the underlying and scarce asset. This is the part that most people miss, and price appreciation is so powerful. But owning more of the asset that appreciates is exponentially more powerful than anything. And that's why institutions don't measure performance in dollars. That's why Michael Saylor and his company Strategy look at their Bitcoin yield every quarterly performance. They measure it in units of ownership, shares, Bitcoin, amount earned in yield. And we can do the same thing with inverse trading pairs. And it's one of the few ways that retail traders can earn more Bitcoin directly with their own Bitcoin. So to understand why, you just need to understand how base and quote currencies normally work. In a standard trading pair like BTC/USDT, Bitcoin is the base asset and dollars are the quote. You're effectively saying how many dollars is one Bitcoin worth. When you trade that pair, your profits and losses are measured in dollars. Even if you start with a Bitcoin, the entire system is pushing you back into fiat terms. In an inverse pair, Bitcoin is no longer just the asset you're trading, it becomes the unit of account. So your collateral is Bitcoin, but also your profit is now Bitcoin. And your account balance is now growing in Bitcoin. So instead of asking how many dollars can I make from Bitcoin, you're starting to ask how much Bitcoin can I extract from the market movement. And here's the key insight. When volatility expands, whether price moves up or down, the inverse contract pays out in Bitcoin. That means the trade itself increases your Bitcoin balance independent of where the dollar price settles in the short term. So if the market chops sideways, crashes, or even just grinds lower in dollar terms, the system can still exit with more Bitcoin than it started with. And that's the flip that most people never make. And once Bitcoin is the base, not the product, everything about your strategy changes. Now let's dive in and I'll show you how we use an automated system to grow Bitcoin even when the price is going down. So first, the one thing you're going to have to do is to put your Bitcoin on a trusted exchange like Bybit or Binance or BTCC and set the collateral toggle on. This is going to allow you to trade against your Bitcoin using this collateral to open up the positions with. Now let's take a look at what that looks like when you're actually setting it up. And next, when you're setting up the bot, you've got to select an inverse perpetual. As you can see, I've selected that there. And this is what the pair looks like, BTC USD / BTC. Now that's what's going to allow for your profits to be generated in BTC, as you can see the /BTC there. So this is a signal bot. It's going to be using that trading view strategy. So all that is ready to go when the bot's set up. Now, if we jump into the actual trading strategy, we can see what we would have done in around about a year. So this is what the strategy looks like live. As you can see, I'm running it from January the 1st till December 2025, December 15, 2025. And here we are. So as we all know, the market has been tremendously flat. It's been up, it's been down. We've had tariff crashes. We've had October liquidation levels that were absolutely insane. But all in all, the buy and hold return is actually negative 4.56%. So for 2025, if you just bought and hold Bitcoin, you would have had a negative 4% return. However, if you used our trading strategy with an inverse, you would have had all these positions open and close. You would have generated around 42%, which is pretty incredible. Now, let's just say, for example, that you discounted your wallet size. So you weren't trading with the full amount because you wanted to create a bit of a buffer at Bitcoin, reducing price due to its volatility. Let's just say you made a little bit more than half that. So let's just say 30%. Well, you could have grown 1 Bitcoin to 1.3 Bitcoin in this 1 year period between Jan 1st, 2025 and December 15, 2025, when your buy and hold would have done negative 4%. So you increased 1 Bitcoin to 1.3, or if you just held that Bitcoin, you'd be down in cash terms 4.56%. So as you can see, trading inverse perpetual futures is huge, because now you have that 0.3 Bitcoin that you've earned, which now when the price appreciates, you're going to also get appreciation on top of what you've already generated. So it's like a win-win. You have a double upside. You have the income that the Bitcoin generated from the trading, and then the Bitcoin appreciation all the way into the future. Now that you've seen how it all works, you can see the distinction we've now made. The entire objective now is structural. Finish each cycle with more Bitcoin than you started with. Over time, these cycles, they compound, not because the system predicts where Bitcoin is going next, but because it consistently converts volatility into additional BTC exposure while keeping risk controlled, using the power law support as our first point of defense. That's the institutional difference. So instead of trying to be right about price, the system is just simply designed to be right about the process. And that's how you move from trading Bitcoin to actually allocating yourself Bitcoin. So if this framework makes sense to you, if your goal is to grow your Bitcoin stack systematically rather than chase short-term dollar returns, then this is exactly what we've built at Minotaur Trading Systems. So below this video, you'll find a link to learn more about how the system works and see whether it's a fit for you. And if you're serious about accumulating Bitcoin the way institutions do, this is where that shift begins. So if you want to learn more about the process and hear from some of our clients, then click on the recommended video and you can see exactly how it all works.